The UGAZ. I had a request to take a look at the UGAZ, which is the Credit Suisse natural gas. The Credit Suisse natural gas. It's a 3x levered ETN. So I'll go over what ETN means, and this is a future contract uh, product that is tracking the it's like CGSC. What's the natural gas? Oh, so here it is, GSCI, natural gas index. So this is tracking the natural gas index, and you can see the moves pretty well go up and down when natural gas is going up and down. And this is going back to 2013. And this is the thing that happens with these future contract sort of products is when you get losses in the real index, you sort of lock those losses in because on the increases, you don't get the increase. So you can see here natural gas is going up and the ETN is going sideways. And the volatility movements are similar, but you don't get the gain. And then when it goes down, it goes down. And this is the kind of pattern that you always see here with these these future contract type of ETNs. So this is Brian Lewis with MMT Investing, and things just changed. So I wanted to take a look at, well, first of all, the red and the green and yellow line is the actual UGAZ line, and this red overlay is the natural gas index. And so let me talk about an ETN first. This is exchange traded note from Credit Suisse, and that N means that there is not any actual commodity backing this product. So N just means it's a debt note from Credit Suisse, and so there's not any actual contract for like physical delivery of natural gas or something like that. Like you get in like the USO oil fund. Like those contracts are, it's an ETF, which means there is actually a fund, there's an underlying asset for like USO. But on this one, it's an ETN, and this is similar to the UCO, the Ultra Crude, and this is the natural gas ETN from Credit Suisse, and this is a 3x levered. So it's supposed to get extra volatile movements relative. And you can just take a look when you get volatile movements, like these little movements here are these big movements here. So you get more volatile movements, but the long term, and I mean this is going, from 2012 to 2015 when gas was going up, you get big volatile movements relative to the volatility, but you don't get the gains. And that is because of Contango. And what Contango does in these monthly kind of levered ETNs is you have futures contracts. These levered ETNs, well, it doesn't matter if they're levered, but the ETNs and the ETFs that are built on futures contracts are subject to Contango. And that's been a big word in the oil and energy sector recently. And that's because oil prices have been down and now they're going up. And so everybody's expecting the USO and the UCO to go up with the price of oil because it is supposed to be tracking the oil index. But you get this Contango thing where when it goes down, it does track it down. But then when it goes up, you get the Contango effect where every month the ETF or the ETN is going to roll over the futures contract. And when you're coming up to that rollover date, it drops the price and you get kind of a long squeeze on the contract, and then they'll buy the next contract at a higher price. And every rollover, while the price is going up, you just keep losing money on the contract rollovers, and that is the Contango effect, where you kind of cap your upside because you keep losing value to Contango on the way up. And this is the graph that you get is you get a pretty flat sideways movement while it's going up, and that's because you keep losing gains to the Contango contract rollovers, and then when you go down, you go down. So let's scroll forward a little bit and check it out. See, depending on where you pin the thing. So down is down, down is down, down is down. So here, let's get to a spot where we're going up. So we're going up here, and we do get some up here. So that's good. And we're going down, roughly down here and roughly down here. And then this gets really interesting here, where the actual price is more volatile than or it looks like it's more volatile than the ETN is. And this is because the price is doing this, and the ETN is losing value to Contango. So you don't get the same slope or the same gain. And as a 3x, right, you would expect the up to be bigger than the volatility. It's supposed to be triple the volatility of this thing, but you're getting like half or something. And that is Contango at work. And then here again, down is down, and it tracks pretty closely on the way down. And then, yeah, down, down, down. And then you see on the way up, it doesn't have the upward volatility. And it tracks pretty close in the short term. So this is the kind of look that you get. And these products are designed for sort of intraday trading or day trading. And here, let me switch over to some smaller candlesticks. And we can see that it is tracking pretty well right now in the short term. And so this is hour to hour, and it's tracking the price pretty nicely. But if you get out to a longer term, look at it, you notice that the ups don't make it up. And the farther out you go, you can see that the ups just really don't make it up in the long term. And then you saw the look that we had out on the super long term, is that this thing is just kind of trending down towards zero. And that's mathematically exactly what these products do. If you have a levered ETF, we got a 3x here. What you have is compounding math. So say you go from like 100 to 120 and then back to 100 on the actual natural gas price. Well, in the levered ETF, you'll make a similar kind of move, ignoring the Contango effect, just the compounding. But then when you come back down to the same price, you don't get to the same price. You get a little bit lower than the same price. And that's just the compounding math inside of a levered fund. And every time you get this volatility, you lose a little bit of percentages to every up and down. You lose a little percentage to compounding. And then every month over month on the way up, you're losing money to Contango on the way up. So the way that I see these is they sort of lock in the real downward movements, and then they're kind of capped on the upward movements. And I think these are good products to short. And I don't really have a good projection about what natural gas is going to do right now. It's really complicated. So this oil situation has a lot to do with natural gas also, because the U.S. Fracking and exploration companies are big natural gas producers. They want to supply Europe, and Russia also wants to supply Europe with natural gas. And we saw in the news this week that Russia is going to violate their sanctions, and they're going to continue building natural gas pipelines from Russia to Germany. It's the Nord Stream 2 pipeline, and it's going from Russia, like near Finland up there, through the Baltic Sea down to Germany, like north of Berlin, kind of near Denmark. They're running pipes there. They have one pipe already in place that has been there for, I think, about 10 years, and there's been sanctions on that pipe. And the UN and the US have restricted how much natural gas Russia can sell to Europe. And now Russia is just saying, forget that, man, because they've been asking for the sanctions to be lifted during this whole oil crisis, and everyone has said no. The UN has said no. European Union countries have said no. America has said no. And Russia just said, like, okay, well, we're just going to build this pipeline. Like, who cares what you say at this point? And they're kind of disbanding OPEC now. The OPEC Plus agreement is Russia's involvement in OPEC and the oil agreements and controlling how much oil to produce. And Russia's just saying, like, we can withstand low oil prices, and we can withstand super high DXY, like the dollar exchange. If the American dollar goes up really high against the other currencies, it starts crushing the other currencies. But Russia, over the last 10 years, has stacked gold. They've completely de-dollarized. So they're basically immune to the DXY going up and the dollar getting too strong. And they can withstand low oil prices for whatever. They said like 10 years they'll be able to do it. And nobody else will be able to handle that. That'll put out oil companies in all the other countries. And maybe just like Russia and Saudi would be able to survive that as far as the oil industry goes. So that's a huge threat over the next 10 years to natural gas. Is Russia supplying Europe with natural gas and putting out the US fracking companies? And this long term, over the next 10 years, has the compounding and the contango effect where it sort of locks in your losses and then doesn't get the gains back over the long term. But if you're trading this in the short term, day to day, hour to hour, it looks like it tracks pretty well. It's just that you get these little losses here. Like when you're going up, you just get little losses, and you can just start to see how that adds up over time, and it just kind of drops the thing down underneath where it should be long term. But daily trading, it does track pretty well, like hour to hour, and I don't know if there's really an advantage to trading this over the gas index or something like that. But to me, this looks like a good product to short things. Like if you find a peak in natural gas, it's kind of safer to short an ETN that has these future contracts because it limits the upside and it kind of opens up the downside and limits the upside. So it's good for a short if you're on kind of a peak that looks like a longer term short. You get an advantage shorting it. But going long on these long term is just, and this is not investment advice, but just straight up dumb. Like you're just gonna lose money to contango and to the compounding, and that's how the ETFs go. And then also with the ETN, I was saying that it's not backed by an actual commodity. It's just a note. It's just a debt note. And what you have with that, it doesn't matter if it's an ETF or an ETN really, but an ETN has a little bit more counterparty risk because there's actually nothing backing it. And what you have is you just have an IOU from Credit Suisse, and if Credit Suisse gets in trouble, they can just cancel this thing, and it can just go to zero if they cancel it, and they have the claim on all the money that you have in their fund, and you can have the worthless fund thing. And there's counterparty risk here as well. And then the eventual math of the contango and the futures contracts is that this thing just trends down towards zero on the very long term. So at some point, once this thing gets low enough, it'll just get delisted. And that's just kind of the outlook on this kind of product and how to trade it, because it does look like it tracks, and it's okay for day trading stuff. And the tighter you get, the better it looks, but the longer term you go, you just notice that it doesn't really stick to it. It just keeps falling below and below and below where the other one is. And I can go out to, I think we could see the whole thing on the daily one. But if I just do this kind of long scroll here, you can see the same thing, that it tracks it really tight in the short term, and then just the longer term you go, it just decouples and falls and falls and falls, and it just looks like it's going to zero, and it is going to zero. And that's what you get with something like the UGAZ or the UCO. And so I don't think a lot of people realize like how these are structured, and I know everyone's trying to look for the best ways to kind of go long on the oil prices going up here, and they're looking at these ETFs and ETNs, and it says 3x, so you're thinking like oil and 3x, like I can make triple the amount of money on the oil going up because it's a 3x or something like that. But that's just not how it works. That's not how these things are structured. These are derivatives, and they're future contracts that roll over every month, and they have compounding math, and they have a bunch of counterparty risk, and there's nothing backing an ETN, and that is what you get. That's what this product actually is, and eventually they get delisted because they just head to zero over the long term. Yeah, so those are some cool little things. Oh, so I'm doing a push now to try to get to 1,000 subscribers. This channel is pretty new, and I have to get to 1,000 subscribers to get the monetization, so that this is like a real YouTube channel and I can keep producing content. So I got a little subscribe button thing somewhere over here. I'm trying to get people to subscribe, and then always the like button helps us out with the YouTube algorithm to try to get more traffic and get our channel going. So if you would not mind, please helping me out with that. And then if there's anything else, I'm going to do a few of these. I got a couple of requests today on some different stocks I'm going to do right now. But if there's anything else that you guys want to see, and also I'm trying to figure out the kind of time length of the videos that people like to watch, because I seem to be getting way better statistics on like 5-minute videos, but all of the YouTube strategy people say that a 5-minute video is a really bad length. You're supposed to do 10 or an hour or something like that. And I've tried some longer ones, and they get worse statistics. So I'm not really sure. If you guys could tell me like what kind of videos you like, what format you like. I have some videos where I'm just chatting, and I have a lot where I'm drawing on the charts, and then I have some where I'm scrolling through the news and pointing stuff out. So if you would tell me like what your favorite kind of videos are, that would be helpful in the comments. And yeah, I don't really have any links or anything in the comments. I'm still working on setting all this kind of stuff up. I just try to produce a bunch of videos, and I haven't done any of the strategy work. But I did get this little logo thing in here, over here somewhere, and hopefully that helps get some subscribers and get this channel going. So that is the UGAZ and ETNs with future contracts and triple levered with the compounding math and the long-term outlook. But I mean, if you go look up these ETNs, it says it's not a long-term product. Like it tells you not to hold the thing long-term. Like up front, it says that it's just supposed to track volatility in the short term for kind of day trading and that sort of thing. But still, you are going to be losing percentages on these ups. Like you can see it happening in the volatility. Like just even really tight, just 3 little bumps here. Like, you're up, and then you lose some, and you lose some more, and then you lose some more. Every volatile up, you're just losing and losing and losing, and then every month you're losing on the rollovers for the Contango. So that's the shape of these guys. And I guess there's a few other levered ETNs that people have been asking about. And this one is probably less interesting to most people because it's natural gas, and it's the oil ETFs that are getting more crazy buzz because of the oil crash, and people are wondering if oil price is at a bottom. And I don't know. I don't know if it is. It definitely crashed, but now it's at whatever price, you know. I think oil is at like 20 or something, or 25 a barrel. But it's different prices for different types of oil on different indexes, and it could easily go from 20 to 10, and that's a 50% loss. And then these levered funds will lock that loss in basically. And then when it goes back up to 20, you won't get back up to 20. So yeah, I don't have a projection on what natural gas is going to do in the short term. It looks like a low. It's bouncing off of this bottom. I have no idea. I have no idea what natural gas is going to be doing right now. I just know there's a lot of risk, there's a lot of volatility, and these funds don't actually track the price. They just kind of track the up and downs, and they lose the price over time. All right. Well, this is not trading advice, and please hit the like button to help me out with the YouTube algorithm, and happy trading.